That stalemate over the fiscal cliff weighed on the markets today, despite some encouraging reports on the U.S. economy. Investors shrugged off news that initial jobless claims fell more than expected last week, retail sales bounced back in November, and wholesale prices declined last month. By the closing bell, the Dow tumbled 75 points, the Nasdaq fell 22, the S&P off 9 points. Well, despite that pessimism, many investment managers and analysts are feeling optimistic about 2013. A new investor survey says the U.S. stock market will be the best performing stock market in the world. For details on that, John Rogers joins us. He's CEO of the CFA Institute that conducted the survey. So, John, the U.S. stock market ranked as the best performer. If we look at the chart here, coming in second place, China and Brazil. Why the vote of confidence considering all these concerns about the fiscal cliff?
You're right, Susie. It's interesting. It's a happy holiday season for investors. In the U.S., the stock market's going to have returned close to 13–14%. And chartered financial analysts around the world that we surveyed, as you say, feel pretty good about the prospects for next year. Markets often do climb a wall of worry, but in perspective, we've had resolution of political uncertainty here in the United States. The new political leadership in China appears to be market friendly. We have avoided having Southern Europe slip into the Mediterranean. And so also given other asset classes, equities appear to be relatively attractive.
Well, let's talk about that actually, because you did ask the people that you survey, what are the best asset classes, and stocks got was at the top of the list. Let's look at the list here, followed by precious metals, commodities, bonds, and cash at the bottom of the list. Tell us a little bit more about those rankings from investment managers.
Sure, and these are chartered financial analysts that we surveyed, our members. They spend their time in the markets investing. And compared to last year, there is more pessimism about the prospects for bonds, for fixed income, given the very low nominal level of yields, and also for cash, where basically you can't get any return. So equities were the clear favorite, with over 50% of our respondents saying that they would be the best asset class. There's still some pessimism about Europe, primarily coming from respondents, our members there. But there's more optimism coming from chartered financial analysts who are reporting out of Asia-Pacific markets, feeling better about the prospects for the global economy, which after all do drive equity prices.
Now that you bring up the economy, let's look at exactly what the results are. When you asked, what the outlook for the global economic growth would be, 40% felt that the global economy would expand, 20% felt that there might be contraction, and Europe continued to struggle in 2013. Can you tell us a little bit more, give us some more color on those results?
Sure. There is more optimism about economic growth than when we surveyed last year, but there are some big concerns. The European debt crisis is the largest one, and also very interestingly, despite the fact that stock market levels have recovered, broadly speaking, to pre-financial crisis levels, our members are very concerned about the crisis of confidence driven by ethical issues in the finance industry itself. And that's something that we pay a great deal of attention to, is restoring confidence through better ethics in the profession.
All right. We're going to have to leave it there. Very interesting survey and the results. Thank you so much, John. John Rogers, CEO of the CFA Institute.